Good day, ladies and gentlemen, and welcome to the show. Today is December the 17th. And, let's get right into it. Let's start the charts right here, and let's take a look at what's going on. In this article from Zero Hedge, it says many countries are facing structural uncertainties that could have far-reaching systematic implications for the markets and the global economy. For example, over the next 5 years, the European Union will seek to establish a new working relationship with the United Kingdom, while also dealing with the harmful social and political effects of slow, insufficient, inclusive growth. It says the EU will have to navigate the perils of a prolonged period of negative interest rates. You know what? I'm going to tell you. The European Union is in such a mess, and we see a reflection of that in the strife that has occurred within countries like France. The people in the European Union, when they pulled the European Union together and they put the euro together as a currency, and the Bundesbank, basically the European Central Bank's an offshoot of the German pocketbook, which is the Bundesbank, they gave their line of credit to all these countries that were joining up into the European Union, and basically they've spent money like mad, right? In 2008, the economy turned down in Europe, and then they funded them like mad. And then after, when Germany started to get to a point where, hey, you know what, we've spent too much money on this project, they said austerity to all the people. Well, the people have been through the austerity. It's almost like giving a kid a timeout, I mean, he don't like it, and they don't want more. And that's the way the people are in the European Union now. And now they're getting ready for this entire world to have a downturn in the economy, and how much more are the people in these countries in Europe that are part of the European Union going to take? This is why I've said it on my show, and I'll say it again, and I'll say it very carefully, that the center of this next crisis is going to be in Europe. Europe is caught in the middle between what's going on in China and the United States. Let's get over here and take a look at this article right here. Now, I want to talk about the repo market for a minute. And I know you guys have heard a lot about the repo going on right now, but I want to make the point that the repo market is a term. It's a term. They have terms. That it's a loan. They're giving them loans. These are repo loans. They're going to be due back, and this is just a very quick fix for what's going on in the economy. In the this dumping all this money into the repo market. This is creating what I would call a repo bubble. Yet another bubble. Because when these terms of these loans that they're rolling over, at a certain point, it's going to come to maturity, and they're going to have to repay these repo loans, and that liquidity is going to dry up as fast as it was poured in. But not now. For right now, they can party. For right now, they can spend all that money, and do what they want with it, because it's theirs until these loans come due. I mean, we're getting to the point now where it's almost like if you're out in the street and you saw a person that's homeless and you gave them $100. Well, that $100 is not going to get them off the street. It's not going to get them a home. It's only going to do them for the day. This is what the Fed's down to doing now with this repo operation, basically. It's like refunding liquidity, like just for the here and now. We're moving into next year, and even though this has created a bit of a bright optimism in the financial system, it's all ready to pop. Daily markets, is the time to party over. Hopes for reduced uncertainty and increased liquidity. It says Santa is a tad earlier than usual this year, giving investors what they wanted most. You know? And it's talking about the repo market and stuff. Honest to gosh, I mean, this is the way it's going now. Let's get in there and take a look at the silver price. 17 bucks, down 2 cents, but it's riding in its range. And, really, investors right now should be really flocking to gold and silver. I guess I'm telling you, there's an economic storm coming like we've never seen before. And nobody can see it. This little thing the Fed's done, to prop up the markets temporarily, is made everybody go back to what they were doing. And everybody's into Christmas right now. And I mean, nothing wrong with that. Christmas is great. I love Christmas. But these markets, we need to be paying attention to what's going on. We just can't lose center and lose focus, because this whole thing is into the new year. I can't tell you what a mess it is. But anyway, gold and silver's at 17 bucks. Silver's at 17 bucks, and let's take a look at gold. Gold is 14.76. It's up 70 cents on the day. Gold and silver's looking good and strong right now. But it should be looking a lot stronger considering the conditions that's going on. Cryptocurrency has really been suffering. We're looking at 184.7 billion with a Bitcoin dominance of 67.2%. And we're looking at the prices, we're looking at 68.51 for Bitcoin. I'm going to tell you guys what. There's strong support at 6,500. But if we break through that line of support of $6,500 and we start to go to the downside from there, it could be a fairly substantial little drop there, And I don't think it's going to break below there's a certain area. I think that we're going to hit a floor, but we're still going through this bearish thing with cryptocurrencies, and there's question marks about Tether, big question marks, because of what's going on through this whole legal thing with Tether, and this is putting and also there's stuff going on in China with the cryptocurrency market right now, and this whole thing has got like a negative sentiment toward cryptocurrencies, and we can see it in the prices, and we could actually break below support, and that strong line of support is at 6,500, and if we break below that, we could see, it could get ugly out there. Anyway, let's take a look now at the Dow Jones Industrial Average. 28,000. This is second. Let me refresh the page. 28,301 right now. We're up 65 points on the day so far. And this market is just going unreasonably high. The old saying, what goes up must come down. The problem is I'm thinking that sometime next year, it's going to come down hard when it does come down. It's going to come down to earth, But, the Fed's got this market's back, so when it does come down sometime next year, they're going to support it. But how? I mean, what are they going to have to do? We're going to see them do things that we never could imagine. Quite seriously. That's what they're going to do. They're going to do things that we cannot imagine yet to support this market come next year. Let's take a look now. Well, we never imagined the repo. We never saw that coming. Crude oil, 60 bucks and 50 cents. We're seeing a steady increase in the price of crude now. Crude's starting to break free to the upside. It's finally broke 60 bucks. U.S. Treasuries today. And, we're seeing this up-down movement. Yesterday is up, today is down on the yields. We're down about 2 basis points, 2.5 basis points through the long end of the yield curve today. The only one that's unchanged is the U.S. 1 year. So we're looking at the 30-year at 2.28, the 10-year at 1.86, the 7-year at 1.8, 5-year at 1.69. That's your long end of the yield curve, you know. In the short end, I mean, there's not that much of a spread between the long end, even out to the 30-year, than the short end, which is this inversion that we've been in for a long time now. Let's take a look now at the U.S. dollar index. 97.20 on the U.S. dollar index. The dollar is up and down a little bit today. We're seeing a little bit of volatility in the dollar today. Gold is more stable today, more steady than the dollar. Dollar's seeing these fluctuations. Okay, listen, thank you guys for listening to this show. Give me a thumbs up. We'll catch you guys in the very next episode. Bye-bye.